Most people think credit history can only be built by opening your own accounts. But there is a quieter path that has helped millions of beginners. It is called being an authorized user. The idea sounds simple. Someone adds you to their existing credit card. Yet the effects on your credit profile, your relationships, and your habits can be larger than you expect. Today, let us slowly unpack how it really works. An authorized user is a person added to someone else's credit card account. They get a card with their own name on it, but they are not the legal owner of that account. The primary cardholder still controls the account, sets the rules, and remains fully responsible for paying the bill. The authorized user simply has permission to make purchases on that shared line of credit. Why does this even exist? Because card issuers know families and close partners often share spending. A parent may want to give a teenager a card for emergencies. A spouse may want a partner included. A young adult building credit may want a careful boost. Issuers allow authorized users so the relationship is formal, the card is legitimate, and the activity flows through one main account. Here is the part many beginners care about. When the primary account is reported to credit bureaus, the authorized user often gets that account reflected on their own credit report too. So if the main cardholder has a long, clean, low balance history, that history can quietly help the authorized user. This is sometimes called credit piggybacking. It can be powerful, especially for someone starting from zero. But the same connection cuts both ways. If the main cardholder pays late, runs up high balances, or misses payments, that negative behavior can also appear on the authorized user's credit report. So adding someone to a healthy account can help. Adding someone to a struggling account can hurt. The authorized user inherits the story of the account, not just the good chapters. Now let us be clear on responsibility. The authorized user is generally not legally responsible for the debt. If charges go unpaid, the issuer pursues the primary cardholder, not the authorized user. That is the legal default in most places. So the authorized user enjoys a quiet benefit without taking on legal liability. But that does not mean there are no consequences when things go wrong. Even without legal liability, an authorized user can suffer if the account is mismanaged. A high utilization rate on the shared card may pull down their credit score. A missed payment can mark their credit report. Trust between the two people may break, especially if family or partnership is involved. So the relationship is informal, but the financial fingerprints can be very real. Let us walk through a simple example. Imagine a parent has held one credit card for 15 years. They use only a small portion of the limit each month and pay in full. They add their 20-year-old child as an authorized user. Suddenly, that long, clean history may show up on the child's report, helping them look more established than someone who just opened their first card last week. Now imagine the opposite. A friend with shaky finances asks to add another friend as an authorized user, perhaps as a favor. The card is often near its limit. Payments are sometimes late. In this case, that long history is not helpful. The shared account may bring down the new authorized user's score and create awkward conversations later. Good intentions are not enough when the underlying account is unhealthy. A common question is whether the authorized user actually needs to use the card. In many cases, no. The reporting often happens regardless of whether the authorized user ever swipes the card. So a parent can add a child for credit building purposes without ever giving them physical access to the card. This is one of the reasons authorized user status is sometimes used purely as a credit boost. However, not all card issuers report authorized user activity in exactly the same way. Some report fully, some report partially, and some have age requirements. So before assuming this strategy will help, the primary cardholder should check the issuer's policy. If the account is not reported on the authorized user's file, then there will be no credit benefit at all, even with a perfect payment history. There is also an important emotional layer here. Sharing a credit card creates shared expectations. The primary cardholder must trust that the authorized user will not overspend. The authorized user must trust that the primary cardholder will keep paying. If either side fails, both feelings and finances can suffer. So setting clear rules early is just as important as understanding the technical mechanics. A few practical rules can keep things healthy. The primary cardholder should set spending limits if the issuer allows it. Both parties should agree, in plain words, on what the card may and may not be used for. They should review the statement together each month. And both should know how to remove the authorized user later, in case the situation changes for any reason. Removing an authorized user is usually simple. The primary cardholder calls the issuer or uses the online portal. Once removed, the account often stops appearing on the authorized user's report going forward, although how this is handled may vary. So this arrangement is not a permanent contract. It is more like a financial doorway that either side can step away from with a clear request. Now let us talk about who benefits most from this arrangement. Young adults with no credit history can get a head start. People rebuilding credit after past mistakes can quietly improve their average account age. People who travel together or share household expenses can manage spending more easily. The strategy is most useful when both people are honest, communicative, and aligned on financial habits. There are also situations where being an authorized user may not be ideal. If the primary cardholder is unreliable, your credit may be exposed to their habits. If you want to learn full responsibility for managing your own account, you may benefit more from a starter card in your own name. Authorized user status is a useful tool, but it does not replace the experience of building credit independently. A balanced approach is often best. Some people start as authorized users to build a small foundation, then later open their own card and gradually take charge of their full credit profile. Over time, the authorized user benefit becomes less important because their independent history grows strong on its own. This blended path can be gentler than starting completely from zero. So here is the short version. An authorized user shares the credit story of someone else's account, often with no legal liability but real impact on their credit profile. Used wisely between trusted people, it can quietly accelerate credit building. Used carelessly, it can damage scores and relationships. Like most personal finance tools, the mechanics matter less than the honesty and discipline behind them.